Just give me a sec, guys. I'm not sure why it's not working. Oh, okay. Hey guys, sorry. I was wondering why the thing. Oh, okay. I was talking to myself for a while and I realized the streaming didn't start immediately. So hey guys, hey, welcome to our webinar today. Before I start anything, I just want to find out if you guys can see my screen and if you guys can hear me properly. Well, okay, I myself am on YouTube. Like I have YouTube running on my phone. It seems to be working fine on my YouTube, so I'm assuming it'll be fine for everyone else as well. Okay, so yeah, hey everyone. Again, welcome to our weekly trading strategy clinic webinar. We do this every Thursdays. We do 3 webinars for you guys every week. On Mondays, we do news update, market updates, and basically just news updates. And like it's basically fundamentals. On Tuesdays, we focus a bit on topical. So we do a lot of like technical analysis, the basics of technical analysis, like indicators, trading psychology, and whatnot, right? So today is Thursday. Thursday is when we focus on looking for setups, look using uh, the strategy that we do use here at Everest Watching Group, and hopefully you guys can implement that strategy into your own trading style. If not, if you're already a profitable trader, then that's great. Maybe you can look into this and see if it works for you, if it helps make you even more profitable. If you're not already a profitable trader, then I do recommend you guys using our strategy, because this is a strategy that we have back test a lot and we have been using in our own trading, and it has brought us quite good results, and I can vouch for it. Okay, so this webinar is brought to you by Everest Fortune Group in collaboration with Vantage Markets. We're an award-winning research firm and the finalist for 2019, 2020, and 2021 for the best Forex and best equity research. We work with major financial institutions to help them forecast where the markets are heading. And now we have a special partnership with Vantage Markets where we're bringing you guys the good stuff. So I do see more people joining. So maybe we can just wait a minute or two for more people to like settle in. Okay, for those who are here, I'm just wondering how you managed to find our YouTube. Did you guys use the link in the email or you use the link in the group chat, like the Vantage group chat? Okay, I do see more people joining. All right. You know what? By the time I'm done with the presentation, the introduction, more people would have joined. So I think I'll just move on with that. Okay, so meeting the team here at Everest Fortune Group, we have Desmond, who is our CEO and our chief trader. He basically taught us a lot of what we know about trading. We've got myself, Cassandra, and my colleague Vico. Vico, you guys have probably not seen Vico before. She doesn't really take you guys for vantage. But a little bit about myself. I'm a prop trader here at Everest Fortune Group. I also double as an investment analyst. So basically, my job is to do a lot of research and to trade for the company. Well, not really for a company, but to focus on trading and do research on where I think the markets are heading. Okay. In terms of trading, hey Palmir, welcome. Hi, welcome to our webinar. I don't know if it's just me, but I hear my voice being a little like squeaky or like nasally. That's cause I'm still positive from COVID. I tested as recent as this morning and I was still positive from COVID. So I don't know if that affected my voice. So I hope you guys can hear me loud and clear, and like I don't know if I'm articulating well enough today. Okay, but yeah, back to myself. In terms of trading, I have been trading for a few years now. I have successfully managed to pass a few prop trading tests like FTMO and MyForex Fund. So basically, this, for those who don't know MyForex Fund and FTMO, it's basically a prop trading test that requires you to do 10% profit within the month. And then there are some really strict rules like you cannot have a drawdown of more than 5% and whatnot. So I've consistently done that. I passed like 4 times now, right? So what I'm trying to say is that whatever strategy it is I am using, it seems to be working in terms of trading. And I think this is important because if you just Google, like, just go on Google and just type, like, how many retail traders are profitable today, it's only 4%. So 96% of retail traders are actually not profitable and 4% are profitable. So I think being able to consistently do that 10%, I would consider myself in that 4%, and Desmond would be in that 4% as well. So whatever we do teach you guys in this webinars or share with you guys in this webinar, it is strategy or like things that we have already backtested and things that we have used and has been proven to work. Okay. So yeah, that's that. Let's move on with the disclaimer. You guys know how this works. I just want to remind you guys that whatever we share in this webinar is purely educational, and nothing in this webinar should be construed as investment advice, okay? Or investment or trading advice in any way. So please do your own due diligence before trading, all right? Please, 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 please use proper risk management. Please do not sell your wife, do not sell your kids, do not put your life savings into trading. Please diversify. Please use the correct risk management for all like trades you are using. Um, I personally, I my portfolio is very diversified. I have more than half in like cryptocurrency. I have some in forex. I have some in CFDs. I have some in not CFD ETFs. I have some in property and whatnot. So my own portfolio is very diversified, and that's what I would encourage you guys to go, not to go all in on one thing. Okay, do not, please do not go all in one thing. I mean, if you really want to, if you're feeling brave, go ahead, but I do not recommend it. I really do not recommend it at all. Okay. Another risk warning I want to remind you guys is that trading forex and CFDs, especially if you are trading on margin, carries significant risk and is not suitable for all investors. So please, please do be cautious if you are trading, and if you're new. Again, just a reminder, I'm not here to scare you guys, but just a reminder, 96% of retail traders are not profitable. That being said, I used to be in that 96% as well. So what I can tell you guys is that with the proper training and the proper strategy and the proper mindset and the proper basics, you will be able to go into that 4%. You will be able to be profitable in trading and make a good ton of like money basically from trading. So do um do put in the time and effort to learn this, because it is a very good skill to have in growing your wealth. Okay. So that's that. I'm gonna move on straight to the charts. At any time you guys have questions, you guys can just drop it in the chat box. I can see the chat moving, so if you guys have questions, do ask me or do whatever it is that you want. You have a burning question, do ask in the chat box. Another thing is that I will be moving to a live chart. So if you guys have any requests on pairs or instruments you want me to look at, because I am an investment analyst, so I can help you analyze like certain pairs or certain charts or whatever it is, you just have to ask in the chat box as well. It can be anything. It can be if you're already in the trade, or if you're looking to get into that trade, or you're just curious where like the euro dollar is going, or you're just curious where the Aussie dollar is going. You can just request in the chat box and I will analyze that together with you guys, right? And then we will kind of come up with a bias where we think the markets are going. Okay, so that's that with the introduction. I'm gonna move on straight to the live charts. Okay, I just wanna find out if you guys can see my charts. Okay, I'm assuming everyone's good because I can see the charts on my phone on YouTube as well. So I think everyone should be good. Oh, thanks. Oh, hey, Lily. It's been a while, Lily. So I think Lily's one of our regulars. And hey, Kelly. Okay, thank you so much. Um, I realized that there are not many attendees today. I'm also thinking someone did feedback that the links were not working. So I don't know if like Lily or Kelly, how did you guys manage to find our YouTube link? Did you use the one in the email or did you use the one in the group chat? Because like our attendance when we were back on go to webinar used to be like a lot higher than this, like 10 times or more higher than this. And I don't know why now it's so little. Okay, so you used the one on Telegram. A few days ago we had someone feedback saying the link from the email doesn't work. Oh, okay. So Kelly used the one in the email. So the one in the email does work, but I guess people are not very informed about the webinars. I'm not sure. It's my first time here. Okay. Hey Kelly, welcome. Okay, since we have newer people here, I will go slow with our strategy. I mean, maybe for people like Lily, who has been attending so many of our webinars, you would already know how this works. Trend line, support resistance, indicators, Fibonacci. Like Lily would be good with this, and like whoever, like our regulars will be so good with this because we do this every week. But for Kelly, who is new here, I can go slow and start explaining why I do certain things. Okay, it's also a good refresher for the rest of you. Okay, so any requests at this point of time? If no requests at this point of time, I'm just gonna randomly choose a pair. Okay, just randomly choose a pair that I think looks like there's some kind of opportunity. Sorry. Okay, let's start with NZD NZD. Okay, so what I usually do, I go on the daily time frame. That's what I usually do. I do the daily time frame to see if I can like kind of catch any important information. Okay, so what information I'm usually looking for is number one, if there is a trend line or channel. So right off the bat, I do see like a possible channel here. Let me just drag this back. Yeah, I would say this might be valid. Let me try to adjust things a bit to see if this could be a channel. Not the best. Not the best, to be honest. Yeah, not the best. Okay, so what I'm looking for with a channel is two touches on the top, right? And two touches at the bottom. But you can see like how these two parts, they didn't really touch the channel. So it kind of makes me feel like this is not a legit channel. Okay. Okay, we've got a request already. Can we look at US oil at some point? We can look at US oil right now actually, because I don't see anything good with NZD USD anyways. I was just randomly choosing one because you guys didn't request or anything. I didn't prepare anything because you guys usually have so many requests, right? Okay, let's look at US oil. Last I remember, I think it was short-term bearish. Okay, that's what I remember last. Okay, so right off the bat, I do see like a triangle. Okay. Oh, let me get rid of that. Okay, a triangle is basically a descending trend line and an ascending trend line at the same time. Okay, this is not the best triangle. Right. So a descending trend line will require three touches as well. So there's one right here. There's two right here. This didn't really touch. So I'm not gonna consider this a very good descending trend line, but we're gonna leave that there just as reference. Okay. The other side is I see an ascending trend line right here. Yeah. It may not even be an ascending trend line. It might just be a horizontal support. Yeah, it is a horizontal support. Okay, when I see things like this, when I see price kind of like moving in some kind of triangle, especially when it's reaching towards the end of the triangle, you see how this was the start of triangle and like it kind of moved a lot already, and then now it's reaching like to the end of the triangle. I it it's kind of signaling to me that there's going to be a breakout soon, right? Because triangles basically price consolidating within the triangle, and then when it reaches the end of the triangle or somewhere closer to the end of the triangle, it's going to break out to the upside or the downside, and that is the direction that it's going to when the breakout happened. So one thing to take note of is that price is reaching towards the end of the triangle. Again, do take note that this is not the best looking triangle because this did not touch. I would much prefer 3 touches on top and 3 at the bottom, right? 3 at the top and 3 at the bottom, but it didn't really touch at the top. This one didn't really touch very closely as well, but we're just going to use this as reference. One thing to take note of is there might just be a breakout very soon. Okay, I don't know if it's to the upside or the downside. Our job as a trader is basically to now go look for information, right? To go look for information to find our bias, whether we think it's going to break out on the upside or the downside. Okay, so one thing we have achieved so far, price is moving in a triangle. Okay, not the best triangle, but it is moving in this structure. Okay, second thing we want to find out is some horizontal levels. Okay, horizontal levels are support and resistance that are horizontal. Okay, not like they're not trend lines, they're just horizontal, just straight lines. Okay, we've got one horizontal support here at the bottom already. I'm just going to highlight this one at the top. So horizontal levels are really easy to find. How you can find them is by looking for the swing lows and the swing highs. That's one way to find horizontal levels. There are other ways as in like you can find pullbacks or overlaps. Okay, but the easiest way is to find swing highs and swing lows. So there's a swing high right here and there's a swing low like right here. If it's not very clear to you, the trick is to change your chart to a line chart. Okay, to change it to a line chart so that you like it's more obvious. You can see the swing high here and you can see the swing low here. Okay, so that's our support and resistance. I'm going to move it back to the candlesticks. Why I prefer using the candlesticks, because the candlesticks gives you more information. Like this is a spinning top. It's a bullish spinning top. That means that there's uncertainty in the market right now. Okay, whenever you see a spinning top, you see a doji, it's uncertainty. So candlesticks give you this kind of information, whereas a line chart wouldn't be able to give you that information. Line chart can give you like kind of like a trend. It can help you see trend better. But if you're looking at individual candlesticks, you will be able to gather certain information that the line chart wouldn't be able to give you. Okay, so that's that. So we have narrowed it down. One, we think, well, I think that price is moving within this descending trend line. Second thing is it's moving within this support and resistance right here. Okay, so if this breaks here to the upside, I'm biased that it's gonna move within the support and resistance. Okay, that's that for now. Again, do take note that we need to wait to see what price does here. Okay, because we need 3 touches, right? It's only doing 2 touches right now. If this just reverses from here, that can be our third touch. So I would say that this is not a very valid descending trend line, but I would say it is a possible forming descending trend line. Okay, it's a possible forming descending trend line. Okay, so that's what we have gathered from the daily chart. We're gonna move on to the 4 hours. Okay, we're gonna move on to 4 hours to see what else we can gather. Um, I mean, if we're looking at the 4 hours, this looks like a very valid trend line. I'm not gonna lie, there's 1 touch here, there's 2 touch here, and this could possibly be a third touch because it is very close to the descending trend line. But let's just wait for that double confirmation. Okay, if price does reverse from here, this is definitely a valid trend line. Okay, yeah. So That's all we've gathered. Hey Lily, since you are the one who requested for US oil, I just want to find out, is it because you're already in this trade, or is it because it's something you're looking to get in on? Just wondering. And also wondering what time frame you are on. Okay. Not sure if my chat is lagging or not. Okay, but I'll just continue. Anyway, so that's what we've gathered on the 4 hours. Sorry, the daily. Now let's try to see what we can gather. Let's see what else we can gather on the 4 hours. Okay, on the 4 hours, I do think the trend line looks so much better, and this horizontal support looks so much better as well. It makes kind of give me confidence that price is just going to continue moving within here until it decides whether it wants to break out. But now I'm confused. I was in a sell trade yesterday, but I'm out now. Okay. Yeah, no worries. No worries, because I was biased that it was a sell yesterday. It's just that every day the markets are giving you new information, so it is easy to have your bias swayed. So I was a sell yesterday as well. I just don't know if I'm still a sell today. Okay, so right now I still don't really have a bias where I think price is going, because price is still moving within a triangle. I do think what I have noticed is that when you see such triangles where it is slanting to one side, where one part of triangle is descending down and one part is horizontal. I mean, it can be the same. It can be one side of a triangle is ascending, going up, and one side of a triangle is just a horizontal line. I do find that the breakouts usually happen at the bottom where the swing high or the swing low happen. So, uh, I mean, this is just based on probability, right? Trading is just probability. So based on what I've seen, like so many times, quite a number of times, I see that price moves within the triangle, and then when it reaches this part where there's a horizontal part, it does break up at the horizontal part rather than that descending part. Okay, so at this point of time, I'm more biased that price will come down here and do the breakout here instead of here. I mean, that's just based on what I've seen so far. It may not be every time, but based on what I've seen, like quite a number of times actually, price does the breakout at the horizontal side. So it can be the other way around. It can be there's an ascending trend line and horizontal, and then I see price is just moving and moving and moving, and it does the breakout at the horizontal part rather than the descending the trend line part. Okay, so that's one thing to take note of. Okay, now that we've moved on to a small time frame, we can kind of highlight even support and resistance are even closer to where price is. Okay, so this I'm just narrowing down where I think price is going to move on a very short term. Okay, on a longer term, if you go to the daily, this is my bias. Price is going to move within that top two support and resistance. But now that we've moved on to the smaller time frame, I'm more biased is going to move within this support and resistance. Okay, so right now we need to wait to see if price reverses or does a breakout. Okay, if that price does do a breakout, um, we need to see if price is going to do a breakout, come here and then reverse, or is it going to do a breakout, come on this side and then reverse. Okay, to the top part. If it does a breakout on the bottom, then we would need to reanalyze and analyze the charts again, because I do think this is a very strong support area. Okay. Okay. I think right now at this current point in time, I am more biased that price is gonna reverse and then reverse all the way to this area and then bounce from here. Okay, at this current point of time, that's what I have. Why I say that is because this is a very strong support right here. Why I think it's a strong support, because price came here one time, tried to break it, it couldn't, it bounced back up, came here second time, tried to break it, couldn't, bounce back up. Came here third time, tried to break it, couldn't, bounce back up. Came here fourth time, tried to break it, it bounced back up. So it has done that 4 times. If it happens 4 times already, if it comes back on the fifth time, I am a bit more biased that it's gonna bounce again because charts are just repeating itself. Charts tend to keep doing what it used to do in the past, right? So because in the past, in the near past, we saw that price kept bouncing off that zone, it makes me believe that when price comes here the fifth time, it might just bounce off again. Okay, so we'll just need to wait to see when price comes here how candle structure is. If price gets to this area and you see a lot of like rejection meaning a lot of wicking, a lot of bouncing up of this area, then you know price is gonna just bounce from here. But if price comes to this area and you suddenly see a super red strong candle that closes below this area, then you know price is trying to break out of this area. So at this current point of time, the only thing that we want to take note is one, this is a very significant level of support. Price is not here right now, but it will get there. When it gets there, that's when you need to decide. You need to kind of like really pay attention. And two, right now, is it gonna break this descending trend line or is it gonna reverse? Okay, I'm more biased that it's gonna reverse. Yeah, I'm more biased that it's gonna reverse. Okay, let me just move this down. Okay, this is also a swing high right here. You see how price came here, it kind of reversed a little. Okay, I would consider that a swing high. So I'm gonna grab this resistance and move it down. Okay, so right now, if I'm being like, if I'm deciding where my bias is, I do have a bias that price was just gonna reverse from here back to here, because I don't, based on candle structure and chart patterns, I don't really see, I cannot see why price would just suddenly break out of here, especially since price was doing lower lows. You can see that it's just doing lower lows here, just doing lower lows and lower highs and lower lows. Okay, you can see it doing lower lows. So I am more biased that it's gonna do another lower high and a lower low. Okay, at this current point of time. Okay, that's my bias at this current point of time. Every time I have a bias, I always want to back my bias up with other things. Okay, so let's go through this again. The first thing you want to do is find either descending or ascending trend line. You want to find trend lines or a channel. Okay, why you want to find this? Because you want to know where the direction is going. You want to know whether we're on an uptrend or whether we're on a downtrend. Okay, so that's the first thing I do whenever I go to a chart. Oh, okay, actually the first thing I do is I clear everything. Right, I will go here, I will go to this bin area, remove all drawings and indicators so that I don't have prejudice on where price is going. Okay, so that's the first thing I do. Second thing I do is find the trend line or the channel to see whether I'm bullish or bearish. Okay, after I've decided whether I'm bullish or bearish, I then look for horizontal levels, which is the support and resistance. Okay, once you find those, once you find your bullish or bearish, you can kind of decide where you think price is going. Okay, at this kind of current point of time, because price is moving in a triangle, I don't really have a strong bias of where price is going. I am a bit more biased that price is, there is bearishness, because this triangle, the bottom part is horizontal and the top part is descending. So I do have a bias that there is bearishness. It's just that this is a very strong support right here. Okay, so we can achieve that. We're a bit more biased that it's bearish. Okay, second thing, we've highlighted our horizontal levels. Third thing we want to do is back those horizontal levels with Fibonacci. Okay, Fibonacci is Fibonacci levels is the tool that you use to kind of see how strong that support and resistance is. Okay, so more Fibonacci levels lining up in the same area, it just means that it's a very significant or strong area to consider. Okay, when I say a lot of Fibonacci levels, I mean like Fibonacci confluences. Okay, so we want to find confluences. Let me pull out the magnet so that it's more accurate. Sorry. Okay. Okay, I can see the 50% lining up nicely with our resistance area. Okay, so I'm just gonna get rid of everything else and only leave the 50%. Okay, so not only there's a swing high right here, there's also a Fibonacci retracement here. Okay, let's see if we can find other things that are lining up in that same area. Okay, nothing. There is, however, a 61.8% lining up there. Let me see if anything else lines up in that area. Sorry. Okay, there is a 78%. Okay, I'm just gonna leave. Oops. I'm just gonna leave the 50% and the 78% there. Okay, why I'm leaving it there is because there are levels lining up here. So when there are a lot of Fibonacci levels lining up there, it just means that this level is significant as well. Okay, this is a significant level. I'm gonna highlight that as red so that you know that it's a resistance. Okay, I'm gonna change this to first resistance so you know that that's our first resistance, and this to second resistance so that you know that that's our second resistance, and so that it's clearer. The charts are clearer, and you kind of have like instruction. I'm gonna get rid of the 0 and the 100 so the charts clean. So whenever I'm doing charting, I always want to keep my charts as clean as possible so that I'm not confused when I come back. Like let's say I go for a lunch break and I come back. You know how whenever you do something and then you stop doing it and you do something else and you come back, you have a different view. Or it's the same as like reading a book a first time and reading the book a second time, right? You'll see it in a different view. So I want to keep my charts very clean so that if I come back the second time later, if I'm doing something, I come back second time, I still have the same view as I did the first time. Or at least when the second time I come back and I'm wondering, hey, why did I put the first resistance and the second resistance there? At least now I have reason. I have reason why I did that in the first place. Okay, so that's one thing. Let's try to look for more levels. Okay, I'm gonna leave this 61.8. Okay, now that I'm trying to look for these levels, I'm gonna say I don't think this is a very strong level. Okay, because there are not many things lining up here. The more things lining up here, the stronger I would think this level is. Why? It's because if I am priced and I'm trying to break, like I'm priced right here, right? And I'm trying to break this level, I need to ask myself what is the resistance or what is stopping price from breaking that level. So right now the only thing that's stopping price is this not really great descending trend line. This trend line that's not even that legit. Okay. There's 50% Fibonacci retracement, which is it's okay, it's there, it's good. There's 61.8 Fibonacci retracement, which is okay. What I much prefer if I could see like Fibonacci projection, Fibonacci retracement, and Fibonacci expansion all lining up in the same area. But right now it's not really saying that. Let me see if I can find more things lining up there. Okay, no. Okay. Right now I have a weak confidence that this is a strong resistance, but yeah, we're just gonna leave that there. Okay. Now that we have found backed up our support resistance, we have our bias of where we think. Sorry, I'm trying to look for that arrow. Where is the arrow? Okay, there you go. This is what my bias is at this current point of time. How confident am I with this trade? Probably 70%. Okay. Whenever you find a bias, you need to say, okay, how confident you are with a trade. I mean, that's how I do it at least. I'm 70% confident that price is going to drop from here. Why I'm 70% confident is because of this descending trend line, which is not the best, but it's there. Because of these two Fibonacci levels, and because price is moving in a downtrend structure with lower highs and lower lows. Okay, so I'm expecting price to do another lower high and a lower low here. If I'm expecting price to do a lower low, actually this would be a better take profit. But just being conservative, just being very conservative, I'm putting the take profit here. Okay, take profit. This is your possible entry. Okay, your possible entry. Where I will put my stop loss is here. I'll put it on top of this strong zone right here. I'll put it on top of this strong zone because for price to even reach your stop loss, it will need to break this zone right here to get to your stop loss, which it will need to break this swing high. It would need to break these two Fibonacci levels. And if price successfully breaks that three elements, then yeah, I'm definitely wrong. I'm just gonna accept that I am wrong because there were so many signs or like resistance, and if price still manages to do it, then yep, then that's fine. Okay, so this is my bias right now, this current point of time. What I do next is I back up my bias with indicators. Okay, I need the indicators to say, yep, we are on a downtrend. If the indicators are saying that as well, then I will be even more confident of where I think price is going. So let's look at the stochastics first. Stochastics, the settings that we use is 21, 5, and 3. Okay, 21, 5, and 3. Honestly, stochastics isn't saying much. So how we use stochastics here at Everest Fortune Group is we find horizontal support and resistance. Okay, so there's a horizontal resistance right there. Right now, if we're comparing this to the charts, right, we're comparing these charts, price is at a resistance already. But if we're looking at stochastics, there is still a bit of room left for price to reach the resistance. Okay, so we're expecting price to reach this resistance and reverse back just like this one time here. Okay, just like the last time. So if we are kind of like coordinating the stochastics to the charts, we can see that stochastic still has room to move upwards, but on the charts, if we're basing on this resistance, it looks like price is already at resistance and it's supposed to reverse off here. So if we're using stochastics to help us make a decision, this is questionable. Okay, this is questionable. That makes me even less confident of the trade. Okay, maybe there's a possibility that this might just be the entry after all. Okay, so because by the time price reaches this entry here at this level on the charts, it would have reached here as well. Okay, so that's questionable. Okay, now let's look at RSI. Let's see what RSI is telling us. So how we use RSI is we use trend lines. Okay, we look for trend lines to see where we think price is going. That's one good thing. Okay, because it looks like price is on an uptrend, but right here price kind of broke already. Okay, so this is RSI is indicating to us that there is bearishness, which is in alignment with our analysis, with our biases. So RSI is supporting us. Okay, RSI is supporting our analysis. Stochastics is saying that there's still room to go up. Okay, and let's see what Ichimoku is saying. Okay, so for those who attend my webinars regularly, you know how much I love my Ichimoku, right? Ichimoku is a trend, an indicator that kind of tells you when there's trend. So before we can even use a particular indicator on a particular pair, we need to see how well that indicator works. Okay, so just looking at this, Ichimoku didn't work very well. Okay, I'll show you an example of Ichimoku working very well. This is a very good example. So usually how I use Ichimoku is that you wait for price to break the cloud. Okay, you go and turn on your conversion and your baseline. So if the conversion line, which is the blue line, is above the red line, it means that it is going up. Okay. If the blue line is below the red line, it means it's going down. So right here, you can see that the blue line is above the red line, so it's going up. On top of that, price is above the cloud. So it means that price is going up. If price is below the cloud, it means price is going down. Okay, that's how I use Ichimoku to help me make my decisions. Okay, so how Ichimoku works is when you find the conversion line above the baseline and you see price above the cloud, at the beginning of the break, you can enter for a buy or sell, and then you can play that entire beautiful move. You can see how well Ichimoku worked in the past, right? If you entered here, you would have been able to buy all the way and then still continue to buy, and you will be in so much profit just based on Ichimoku. Using Ichimoku alone, you'll be in so much profit here. But the only trouble with Ichimoku is that it doesn't work on sideways market. So you can see here, price is moving sideways already. Price is moving sideways, and therefore Ichimoku would not be useful on this chart. Okay, you can see price broke out here. It kind of came down and then it reversed and then broke out, kind of did a small little thing and then reversed. Okay, so price doesn't work well with Ichimoku when it's moving sideways. Because of that, we're gonna get rid of Ichimoku because Ichimoku will not be helping us make our decision. Okay, so right now, what do we have? Let's say I have 100%. Okay, I'm 100% confident that this price will drop from here. Okay, but right now the Fibonacci levels here are not really lining up very well. They're just Fibonacci retracement. There's no Fibonacci projection. There's no Fibonacci expansion. There's not really much confluence going out. So maybe right now I'm like 90% sure that price is going to drop from here. Okay. Another thing that's good is that RSI is kind of supporting my argument, saying that it's going to go down. So that maybe I'm like 92% sure that price is going to drop from here. And then now I see stochastics. Stochastics is saying that there's room for price to move up. Okay, so it kind of is, if I'm looking at stochastic saying this is not the best entry. The best entry might be a second resistance. Okay, so right now maybe I'm like 85% sure that price is going down. Okay, sorry, maybe 80% because I did think stochastic works very well. Okay, there's a trend line. The trend line isn't the best. Okay, it's kind of like meh. It's not the best trend line. So right now I'm like 75% sure that price is gonna drop from here. Okay, price is moving on a higher low, lower low, lower low. I'm expecting price to do lower low again, lower high. Sorry, lower low, lower low, lower high, lower high. That kind of gives me a little bit of confidence. So after I've gathered everything, I'm 75% sure that this price is gonna go down from here. Okay, so that's how I find my trades, and then when I find how confident I am, then I get into a trade. So usually I would only take a trade if I'm 70%, at least 70% sure. So right now 77 is like it's okay. It's not the best. Like the ones I'm really confident in is like when I'm 90% sure it's gonna go to my take profit. When I'm like 75% sure it's gonna reach my take profit. Do I want to get into that trade? Yeah, possible. Oh yeah, okay. One more thing to help me decide where I think price is going is that even if this is not the correct entry, even if the better entry is here at the second resistance, at least I know that my stop loss is, I have a good stop loss. I'm very confident with my stop loss placement. Okay, so that maybe that gives me like another percent. So right now I'm like 78% sure that price will reach my take profit, but not reach my stop loss. Okay, so I'm 78% sure. I'm not very confident. Like the ones I'm very confident, I'll be like 90% sure. Okay, those that way I'm 90% sure, usually I'll go in with a 3% loss, 3% risk to reward. 3% meaning if you have 100,000 account, I'm only risking $3,000. Okay, my stop loss is $3,000. So if I am wrong and price reaches my stop loss, I will lose $3,000. But right now, because I'm only like 78% sure, I'm not really that sure. I'll probably risk like 1.5%. Okay, so 1.5% means that if I have $100,000 account, if price reaches my stop loss, I'm only allowed to lose $1,500. Okay, so that is how I look for my setups, and that is how I use proper risk management. And by using proper risk management and by looking for setups that make sense and are probable, right? I mean, you're not gonna enter a trade if you're only like 50% sure, right? If you're only 50% sure, you might as well go to the casino. If you go to the casino and play blackjack, you also have a 50% chance of winning, right? But the thing about trading, it's not gambling. It's up to you to look for probable trades. The ability for you to look for trades that are probable is totally in your hands. Because if you look at US oil and you don't think it's probable, then move on. Don't take the trade. Just move on to the next. Move on to the next pair, because there's so many instruments and there's so many pairs for you to look for. There's so many indicators to help you find data and help you narrow down where you think price is going, right? So your job is basically to just look for probable trades. So right now I'm only 78% sure that it's gonna drop down from here. I'm actually more confident it's gonna drop down from here. Okay, but maybe I'll be like 80% sure it's gonna drop down from here. But from here, I'm only like 75% sure, maybe 75% sure. So if you guys want to take this trade, that's entirely up to you. But today's topic, trading strategy clinic, is how I show you guys what strategy I use and how I find my setups. And this is exactly how I would find my setups and how I would find my trades and my winning trades, by finding high probable trades. Okay, anything below 60%, don't take it. Anything below 50%, don't take it. Anything below 50%, you might as well go to the casino, right? You might as well not be on the charts. You might as well not be trading forex. You might as well go to the casino, because you can go play blackjack and your chances would be the same. You can play roulette and your chances will be the same. Just choose black or red, and your chances of winning will be 48%, because there's one green, right? So just look for high probable trades, and that's how you will be able to grow your account. Okay, so that's done with US oil. So Lily, you are right if you were selling. Well, not right, but because I can never say we are wrong or right, we can only say which direction we are more biased to, right? Where we think is more probable. Okay, so I am more probable. I am more biased that price is going to drop. I'm more biased of bearishness. So I would say I have a medium, like a medium view, uh, weak bearish view, weak bias that it is bearish, or medium bias that it is bearish. Okay, that's that. Do you guys have any other pairs you want to look at? If not, I'm gonna just randomly look at pairs. Okay, we're not gonna look at Kiwi dollar because um, maybe we can look at Kiwi dollar. Sorry, just give me a sec. Okay, no, we're not gonna look at Kiwi dollar. We want to have. I do think it's possible to find a trade with this, but I would much prefer if there were more information here in the recent future, not somewhere that far away. Okay, um, even if information was that far away, you would still be able to find a trade. But I would much prefer for this webinar to have something closer, so that's easier to show you guys. Okay, we can look at NZDJPY. Let me see if this is even a chart worth analyzing. Structure doesn't look that great. Okay, let's look at something else. Structure doesn't look that great either. When I say structure doesn't look that great, it means that I want to look for charts with very clean support and resistance. Okay, when I'm looking at a chart, my priority is always horizontal levels. Horizontal and price action is key to me. Things like Fibonacci indicators are like the least of my priorities. I don't know if you guys have heard this saying, traders who trade based on indicators alone, just using indicators, are traders who lose money. Okay, so we don't want to use indicators, we want to use horizontal levels backed with indicators. The indicators is just supposed to help you decide whether your bias is correct or not. Okay, not very clean charts. Let's try to look for something a little cleaner. I think this is okay. Yeah, I think this one is okay. Okay, UCAT, USD Loonie. Okay, let's first look for our direction. Oh, great. Price is moving sideways. I don't like trading sideways market. The only time I trade sideways market is when I wait for a breakout. Okay, so I will highlight the sideways market. I will highlight the horizontal support resistance. And what I really want to wait for is for price to get here and break out here or break out here. Okay, that's the only time I trade sideways market, by waiting for the breakout. Okay, so the breakout is when it breaks out here and I don't enter when it just broken out. Okay, because it might be a fake out. Okay, it might it might just be wicking and coming back in. Okay, so what I want to do is wait for the breakout, wait for price to come back to that zone it broke out, to that support or that resistance that it broke out to, and then I enter here for the buy. Okay, that's how I play rectangles. This is called a rectangle. That's how I play rectangles. Why I'm waiting for the pullback? Because when price gets back to the pullback, I want to wait for candlestick patterns. I want to see candlestick patterns. For those who don't really know candlestick patterns, you can just Google candlestick reversal patterns. Okay, and then you can just read up on it. Yeah. So when price comes back to this area, I want to look for candlestick reversal patterns. I want to look for like a hammer, or the shooting star, or doji, whatever it is, that indicating to me, or some kind of rejection that is indicating to me that price is gonna bounce from here. If price gets back to this area and you see a super strong red candle, it's going back inside the rectangle, then you know that this is a fake out and you should not get into that trade. Okay, so with rectangles, this is the only way I would trade it. Another name for rectangles is actually called price trap. Price trap meaning you're trapping the price. This is a form of price trap where you're trapping the price within the rectangle. You're waiting for the breakout. Okay, you're waiting for the breakout. Okay, so because we have spotted a a rectangle, I'm just gonna highlight the levels. Yeah, this is basically the two levels. Let me see if you can. Nope. Okay, these are the two levels you want to take note of. You want to see if price breaks either resistance or the support. For those who are new here and you must be wondering, oh, I want to get in a trade right now. I just want to tell you guys that trading, I say this in all my webinars, trading is 10% selling, 10% buying, and 80% of the time you're just waiting. 80% of the time you're just waiting for price to do a breakout, retest. You're just waiting for price to go to your entry. You're just waiting for something. Okay, so right now, this is the plan, is to wait for price to break out either to the upside or the downside, and then you can go from there. Okay, let's see what it's doing on the 4 hours. The 4 hours, there is a smaller and closer rectangle here. Right, there's a closer one right here, but I much prefer using the daily, the one on the daily, because the higher the time frame, the stronger structure is. Okay, so price may not respect the track. This is not even a good rectangle anyways, so it's fine, don't even use this. Let's see, on the 1 hour, nothing much, to be honest, nothing much. Okay, there might be a very even smaller rectangle here. Yep, there may be a even smaller rectangle here. So if you want to play this even smaller rectangle, you can wait for price to break either this side or this side, and then play that just very short movement. But this is for scalpers. If you guys are not scalpers, don't even bother going down to the trading this. Actually, you don't even have to be a scalper. You can just be a day trader. You can go on a 1 hour. Okay, so that's that with the USD cat. Nothing much other than the rectangle. Let's see if we can find something else that looks like a possible channel. Right? Do you guys see that possible channel here? Not the best looking channel. Okay, it's actually okay. Yeah. On the 1 hour, there is a channel. Whenever you see a channel, the bias is that price is going to move within that channel. Okay, but we need to go on the bigger time frames to see what other information we can collect before we decide what we're going to do in the bigger time frames, smaller time frames. So AUD, AUD, USD. Does it look like we need to first find the trend? Okay, one thing I spot is a possible, not the best. Not the best, honestly. Okay, I don't see a very clear direction. Okay, I don't see a very clear. I cannot see whether it's an uptrend or a downtrend. It's not very obvious to me. Not the best, honestly. Okay, so don't really see much on AUD, USD. Other than the descending channel on the 1 hour. Okay, let's see if it's possible to even play this descending channel. Okay, let's see if we can get in on this. Right? Okay, let's highlight some support resistance first. I do think price is going to come down here, but it's already on its way down. Other than that, nothing much. Yeah, nothing much. Price is already on its way down here. If we saw this like 1 hour ago, which was the start of the webinar, I would have been able to, may have been able to catch this, but like it's a little too late now. Price is already on its way down. But yeah, that's basically how you look for setups. To look for trend first, horizontal levels, and then look for your setup. Okay, guys, I don't have much time anymore. I only have 1 more minute. I don't think I'll be able to analyze another chart. So thank you guys for joining my webinar. I will see you guys on Monday. Monday is when we do our market updates and our market and news updates. Okay, we do that on Monday. So I'll see you guys on Monday. For those who joined today, thank you for joining. Please like and share this video because it will help us so much with the algorithm and it will help us so much with being able to do more webinars for you guys. Okay, so I will catch you guys next week. In the meantime, I hope you guys find good trades. I hope you guys grow your account and I hope you be profitable in trading. I really, really vouch for you guys, and especially since you guys put in the time to learn this, because I know a lot of people who always say like, oh, I want to be profitable in something, I want to be good in something, but they don't actually put in the time and effort to do it. So the fact that you guys are here sitting here for 1 hour learning about trend lines, channels, support and resistance, It just shows that you guys are putting effort, and I really do vouch for you guys so that your account grows. Okay. Um, Please remember to diversify and use proper risk management. Thank you, Kelly. Thank you, Russell. Thank you, Lily. Um, Thank you, Palmir. I will catch you guys next week.